So, in the next part of this, we're going to take the understanding that you have behind supply and demand and then fractal supply and demand, also known as MBs, in terms of how moves set up, how moves start to validate, and then how moves actually deliver. And we're going to take them to the next step. In the next step of how you actually understand the interaction of supply and demand on a given pair or an asset over time. And the first point of doing that is actually going to start with this. Okay. It's what I call a perfect world, but not so perfect because not every move is going to be just perfection and look exactly like this, as you already know, right? Theoretically, if every move was as simply as just spotting this and always buying, then all of us would make money. But that's not how the moves work. Instead, there are fractals and multiple timeframes that formulate these moves. And once you understand how prices move and you look for these moves, that's what makes you profitable, not necessarily just buying a pattern, right? Which is why you're learning to think across timeframes, to think in terms of orders, to think in terms of how is money entering a given market. And then from there, you're actually establishing your trading criteria or your trading ideas. Okay, so in our first way of taking this understanding of supply and demand to the next level, we are just adding another up candle. So this is what you just learned. This is relatively simple. And all I'm doing now is I'm introducing a new up candle. So now all we have at the moment is some kind of bullish push. And then we have that creation of demand. Demand validates. And of course, from that point on, we expect the delivery of price because that's on average how prices move and formulate larger moves, right? So this is what we've covered in the first section of the entire mentorship / approach to actually trading. And again, as we look inside of it, we get the same thing. In the lower time frame, on some lower time frame, you might have the beginning of validated demand within the creation of this overall validated demand, which becomes the potential validated MB of a lower time frame, which in this scenario here, because of the delivery that does occur, becomes validated MB at that point, right? And then you have that across multiple versions of that delivery. And we understand that as we prorate that across timeframes, because it's a demonstration of how orders are entering the market, we start to understand that all of these kind of boil down to the same initial starting point and idea, which is this, okay? Demand gets validated, price wants to move. And what's cool now is that if we take this little thing that's occurring, you actually get introduced to the initial stages of how structure in the market works. So the step 2 of taking supply and demand and taking it to that next level to understand when is it a better time to buy. So if you remember what I asked you guys and what I expected a lot of you to ask is, one of the questions that's going to come out of this is what's going to qualify good zones, good MBs, good demand zones that we should watch, that we should keep an eye on, that we should start potentially assuming risk on, that we should start buy stopping. What's actually going to clarify that? What's going to give us a reason to do that? This is your next tool that starts to create context or story to the delivering action that then lets you determine if it's even worth potentially taking a buy through a high, if it's worth taking a buy through a high, if it's worth taking a buy through a high, any one of the examples we've covered before. So the next step to it, okay, very simply, don't want to ruin it for you guys, but the point of this is not to surprise you, but it's to show you how to think about the markets, okay, is all we've done is we've added another leg to this. And again, if we were to try to draw this out as best as possible with just what we have in front of us in a perfect world, this would be demonstrated by a move higher, a drastic move higher, right? A pause in price, a move lower, and a continuation in price. And as a lot of you might spot, this is the starting fundamental building blocks of what we call structure. Structure is an extremely important section of the way that we get involved. It's actually the thing that proves to us that there are orders coming into that market that want to be supported and that want to continue moving. And it's a building block of supply and demand. So what'll happen is you get a low, right? That's this low. You'll get that push, which moves to a high. You'll get a move that comes down, but cannot make its way below, let's say, a larger protected low where the initial buying had started, creating a higher low. This is where higher lows and higher highs come from. And again, you're going to learn structure a lot differently here, and you'll see why in a second. And then you proceed to a higher high. And as a result, price often in the next moves or in the continuation of the moves never looks back and delivers and delivers and delivers without ever coming back to validated demand, thereby confusing a lot of traders that don't understand that trends have begun, that the orders that were supplied were accumulated, demanded, and now all of a sudden, through this move, you have wild moves higher. So this is why a lot of the time, if you've already traded before or haven't traded, either way, it doesn't really matter. But if you've traded before, this is why a lot of the time, if you, let's say, miss a move and then something like this occurs, which it usually does occur if there's a real trend, you're sat there on the sidelines wondering, how the fuck do I get in? Why haven't I been able to get in? Why am I always wrong about the market? How is it always running without me? Why is the pullback that I'm looking for not occurring? Well, it's because the structural the structure of the market has begun to deliver. So this takes us to the next premises or the understandings behind structure. This is the very, very starting point where you have a push, a higher low, a higher high. This is the starting point of just basic structure understanding, right? And beyond this, once we validate that demand, we should all be aware that that's going to likely lead to some kind of move along these lines. Yes, there may be pauses, maybe even minor pauses, right? Whatever it might be. But oftentimes it leads to true continuation. And as a result, if we try to draw in our best version of this, right, what's really happening is through that higher high that formed, you might have like the huge moves, right? It pauses, maybe pause for a little bit, and then huge moves. And again, people wonder and are always confused why the price is not making larger pullback, why their fibs or whatever are not working, why there's not a clear move like this that just keeps coming back. And the reason for that, just as we've discussed before we did anything else, is that because we're validating demand and because the move is true and demand is truly behind it, and the comp set operator is now positioned and ready for that move to deliver, a trend begins. So lo and behold, as you just saw down here, this is your initial starting point. This is your initial starting point and understanding of structure, right? You get a push, you have a low put in, and a higher high forms from there. And as we kind of look at this, you should be seeing the remnants of what you've learned before and seeing already how just this alone can give you a tool or a follow-up confluence of when to prepare potential buys in a given market. So for instance, if you see a market, again, this is still scratching the surface of what we do, but it's a phenomenal starting point. So if you see a market make a push higher, an initial push where it's basically proving to you that demand is entering the market in some way, and then all of a sudden supply starts to enter the market, right? So people start to supply into the market. Due to the initial push, your assumption becomes that you're about to get a higher low or some kind of low that's then going to move on to continue higher because you have an initial form of demand. So as supply comes in and it starts to come in any of the versions that we've studied before and any of the examples that we've kind of looked at before, as that comes in, you start to understand that lower time frame based validations of MBs or invalid larger MBs that are becoming validated on a lower time frame multiple times. So you can take it in the assumption that it's going to start validating, which will validate a demand zone, which will lead to an overall move, right? You now have a starting point of understanding what's going to create the initial and larger move. Demand comes in, proving itself. Supply starts to enter. The supply gets accumulated. Through the move higher, you start validating inside MBs on the right-hand side of price, larger invalidated MBs that become validated, and those form those same large down candles before moves that one, they're validated, and that a higher high might be put in place. Price tends to deliver, right? That's what starts to form those other examples we've worked through where you have, a number of these in a different way on some time frame where the MB validations lead to the exact same thing and price delivers as it validates the move higher. This is that starting point. So now you have one more piece of confluence to understand when it might be better to consider an actual entry given the things you've learned thus far. So now you should understand that an MB or a validated demand zone is going to be stronger and better and be worth taking risk on when you have the initial proof of demand coming in and all of a sudden price begins to build that new demand zone. That's this understanding right here in a simplified form without anything else at the moment. And very quickly, we can look at a few main structural rules in regards to this right here. So again, you have a low, it builds to a high, it comes down for a higher low or basically a low and moves to a higher high. This is before any other structure forms yet. This is just the initial starting point of a potential demand move, right? Because then once demand validates, you get a crazy move. So what are some of the important things that we can take out of structure given what we've gone through thus far? Well, structure starts with an initial leg. This is called an impulse. Very simply, in our scenario here with nothing else, This is that impulse. This is an impulse leg. Some kind of buying, as we can see here, an initial onset of buying comes in, and it's the first validation of real demand, because this is likely happening from some kind of other action, which validates some form of demand somewhere, right? That's what's happening. Some kind of MB is being validated across a bigger time frame. Maybe a demand is being validated here. Maybe just a normal down candle followed by an up candle is being validated. There's some kind of initial onset buying, right? There's proof that money has come in some way. Notice how we're not the ones trying to get in here. We're allowing the money to prove that it wants to be behind this move, the composite operator stepping in some way, so that then we can get ourselves positioned on potentially the next demand validation / MB validation higher. Okay, so what happens is, for structure, or for the very basic premises of the start of structure, is that it starts with the initial leg. Then, after an initial leg has come in, or an initial push has come in, sellers enter the market. Now, these can be any kind of sellers. You can literally make up anyone you want, but then sellers enter. So these could be traders that are unaware, right, of the underlying demand shifts, which in a lot of cases might have been a lot of you guys before you started watching this course or started to kind of understand how the fundamental rules of the market work. Because remember, this is like the easy perfection, but the reality of the market is it's not perfect, right? So what's happening is oftentimes this kind of thing can form from already a prior defined market that might look something like this, right? So something like this. And a lot of traders at a point like this are already waiting to get short around, a head and shoulders or a resistance, around a future resistance, around some kind of random zone in here and here and here, or whatever it might be. So you have to recognize that there is not a perfection in terms of the market's just going to be like, oh, here it is, right? You're going to learn to see that. You're going to learn to get really good at it. But it's not like you just have a market make a move and everyone's like, oh, this makes so much sense. We got this. It's easy, right? That's not how it works. So remember, this is an easy example of what is occurring with what I'm teaching you, but this can be occurring almost anywhere. So let's keep that in mind. But nonetheless, as a high gets put in, because simply you have demand come into the market and there's an initial onset of buying, sellers begin to enter the market. So these are people that could be unaware of the underlying demand, people that could be averaging down on their poor prior positions, people that could be getting out of positions that are now taking huge losses, right? Or getting into new sells, or averaging, whatever it might be. There's sellers that are entering the market, or traders that are unaware of the underlying demand and the overall market condition. And then ignore this. This doesn't matter. I took that out because it's not important at all. So do not focus on that. But then what happens is, as those sellers come into the market, whoever those sellers are, as we understand the game of supply and demand and how it's played, the composite operator, of course, begins to accumulate. So again, buyers, aka the composite operator, redemand, so people that have been prior demanders. So in the sense that we've already validated demand in the past, right? What does that mean? If we remember what we kind of went over a few times, when demand is validated and there's true demand in the market and the market moves higher, the composite operator that has gone behind the point, behind the market, is in enough profit now and will not take a losing position on the validated demand. So they'll get in higher and they'll get in higher and they'll get in higher until the move is over, right? And as a result, right, what you actually have happen, right, as we can see here, is that buyers start to redemand new orders, right? So people that were already in this start to redemand new orders through that supply. They start to demand those orders. And new buyers that start to understand what's going on with the market. So this is the actual smart money, bigger institutions, other composite operators that become a part of the composite operator because they understand where the move wants to go. Those new buyers demand at those prices and all these prices here of the supply that has come in, as they are optimal areas for re-getting involved. So they buy. And as a result, price moves higher. And all of a sudden, as price moves higher and higher, it validates supply and demand, it validates demand on lower timeframes. It validates MBs on this time frame or higher timeframes. It validates MBs within MBs. It starts to validate MBs within invalidated MBs, which then become validated MBs. And all of a sudden, you validate demand to the top side. And as price moves higher on some time frame, this formation occurs. On some time frame, demand truly becomes validated and price never wants to come back to those initial orders that were now accumulated by the composite operator. And if the move is truly going to trend, price is going to go without ever looking back. And then you have the initial start and the initial reasoning structurally for what begins a move. And that will repeat over and over again until the composite operator no longer wants to take that price higher and or begins to sell off those positions at large profits. Okay, so some fundamental rules is that structure can always begin within a structural leg. Okay, this is very vital. This means that, if you have a market that looks something like that looks like this. Let's say there's already some kind of move happening, right? Maybe it does something like this, right? Whatever it might be. Like if it does something like this, this in itself, just a simple move up with that pause, right? This in itself is already the formation of this structure right here. It doesn't have to be from a perfect area. Now we're going to get better with this concept over time, but what I want you to start off by understanding is that a structure can begin from any area. So if something is proven to be very bullish, right, and then all of a sudden, maybe it's in like a larger range or playing around a lot more, or it's within a bigger structural range, and all of a sudden you get an initial onset of buying, you get that high, you get that higher low here, because this would be a low and this would be like a higher low, or simply this low, right? However you want to view that. And then again, demand starts to get validated and gets traded through. MBs begin to be validated inside of maybe undefined MBs, which then invalidated MBs, which then become validated MBs. And that can start a leg, a structural leg, just like this, within potentially a bigger structure or bigger range, whatever it might be. So something that you just have to remember is that structure can always begin within legs or within ranges, right? So if you get that initial push, that could be its own start of a structural move. And we're going to look at examples of this later, so don't get too confused by it. But simply, this is vital. Some people get too attached. They get very attached to one side of a market, right? And they basically won't allow themselves to see the entry or to see the start of a potential move, because they're very biased on what they want to see from that market, right? So a great example of this, a very simple example of this, right, is what you see below right here. Is just like a very starting point. I'm going to show you more examples later, but very simply, right, if you have an overall structural leg, let's say it starts from here, moves to this high, right, that's a potential structural leg, and then it pulls back. In that pullback, right, where it's creating potentially the anticipation of a higher low because now demand's in control, you might have another time frame or another area that starts to break down in structure, right? So other structure might start to break down and actually make bearish moves. And all of a sudden, those exact breaks will force people to tunnel vision so heavily on them that their focus will now become to sell the resistance, to sell the head and shoulders, to sell a zone up here, to sell a pullback into this area, to sell anything and everything. And they forget what the underlying condition of the market truly is, right? Where you have a move up, then price pauses by coming down. That is new supply entering the market. And those people that don't understand that that's what's happening end up being new supply that gets demanded through all these highs here. And all of a sudden, true demand comes in, validates, and in this case, based on my drawing, it's incorrect, but validates and then never returns and starts a true move. So what's happening though, right, at the same time is that people, because they don't understand that structure can begin within structural legs, right, they won't see this right here. So let me make it red. They don't see this right here as a potentially viable initial onset of demand. So that's what would be equivalent to this right here, right? That's that initial onset of demand. This is that initial onset of demand. People will stop themselves from seeing that, right? But again, if I asked you the same question that I asked you before, now again, ignore the fact that you don't know, right? Because you're still learning how to do it. But in the theoretical world where the composite operator, the big money, wants to move money to the long side. You know that. Let's just assume you know that for sure. In the condition that you know that, right, would it be the case that you would start to become a short seller or be short or assume that you want to sell this market when the market's here? The answer is no. Because if you know fully, and you're going to learn how to do this, but if you know that the composite operator wants to take price higher, if you understand the composite operator is taking out all the supply that it can, accumulating that supply to make new demand validations higher, would you start to view this impulse here as an impulse to start a potential leg higher or to start a potential structure higher? Or would you view this as a thing to just potentially sell? You would start viewing that as true demand. You would start viewing it under this condition right here, where you would start to view this initial leg as an initial impulse with the initial onset of buying of true demand. You would view the pullback, even though it looks like it wants to go lower because it looks scary at the time, because remember, when you're looking at a market like this at the time, it can look like it's breaking down. This is also where a lot of people go wrong, right? But instead, if you know at some level that the composite operator wants to take the market higher, you already assume that this is an initial onset of buying, and on the next pause, like this, you assume this is going to lead to now higher highs. So what happens is you begin to look at these areas in here. This is where it gets kind of wild. You start to look at these areas in here as MB validations, as demand validations, as bigger MB validations that could happen, as MB validations that happen after prior MBs, and you start to buy, right? With your stops, let's say here to the top side. And as you get into them, you're doing that on the assumption that this is going to start making a new higher high. And as it does that and validates demand across a higher time frame, because that's what an MB is showing you, price is going to start a real move. And even on the next move that might pause or come way lower and under this, your actual entry is left untapped, of course, because true demand has entered, and you get to sit through the delivery of a real structural move. So just in this example, you should be taking this main point out of it, that a structure or a leg like so can begin from any basically starting point. It can just make a move, and that in itself can be that initial onset of buying. Selling will come in. That selling is going to formulate those same things that we spoke about before, those versions of MBs, unverified and unvalidated MBs within those areas. You have validated MBs, ones that are coming one after another, and those begin and create those opportunities for entry. And again, even as we take a look at some of these examples on the left, and we're going to take a look at some examples like in exact correlation with this concept in a second, you can see that kind of thing happening. As price breaks down, a lot of people here get really, really confused and start to assume that the price wants to go lower. But they forget that you consistently exist in multiple structural legs. And you might be existing in this larger structural leg that wants to put in price higher. And all of a sudden, you have lower time frame structures starting here. And those structures lead to MBs or buy stoppable demand zones that when they get validated and validate a potential higher time frame based higher high, right? That puts in a real move that then starts and goes and goes and goes, right? Because you're going to learn in a second that real structure does not look like this. A lot of places will teach you to look at structure like this, which is wild. But we will talk about that soon as well, okay? So the main starting point of your understanding right now, at least right here, right, is these basic rules, right? How does the first initial simplest version of structure actually begin? Well, initial onset of buying comes in, it creates some kind of high, and there's basically a low here. Then it pulls back through those sellers entering and basically undergoes the exact thing that we discussed in the prior section where we talked about how demand truly enters the market, given that we understand the composite operator wants to take the market long. And this is just another tool that we can now add into our brain of understanding when a market may want to go long. So the sellers enter, or traders unaware, or whatever it is, we don't care who enters, right? That gets redemanded by the composite operator or by new demand that enters the market, aka the new composite operators that overall make up the composite operator. And it repeats over and over again as demand validates. And very simply, as even kind of a starter system to show you in front of you right now, you have some kind of initial buying on a higher time frame or an initial onset of buying. Price might pull back. That pullback might lead to some kind of inner breaks that may really confuse a lot of people because they start thinking, hey, this market wants to go down. It definitely wants to go down. And all of a sudden, you get a true red impulse. This is that red impulse that we're talking about here of initial onset buying. That buying pauses. And because we understand what's going on, we don't look at this as a potential to go short. We instead understand that it's setting up those new MB validations to go long. And all of a sudden within that, on let's say a lower time frame or a lower understanding of what's going on, you have the validations of MBs, right? We enter through the validation of those MBs. And as we get in, they validate demand on a higher time frame, of course, like the red. And all of a sudden, price will never return to those points, and you get to catch the actual trend that delivers higher. Okay, so that's the very starting point of actual structure and structural understanding, right? And once you start understanding this, you're already going to have the ability to kind of build a really good or a decent system that's going to outperform the stuff that you've learned before in huge ways. But we're going to continue going now to add even more tools and understanding to that system so you can get even more proficient at finding these areas that are worth trading and putting your risk on. Okay, cool. Let's go next.